The psychology of attracting private investors for your property deals. That was the subject of this talk by Ayesha Afori at a recent Baker Street property meet. Ayesha Afori is a former banker with Goldman Sachs, well used to working with high net worth individuals, and she's taken some of that experience into her property career to attract investors for her property projects. If you're new to this channel, make sure you subscribe and hit the bell icon. We release plenty of new content each and every week, all dedicated to helping you become more successful in property. And also, if you haven't been to Baker Street, then what are you waiting for? We meet on the last Wednesday of every month. It's the largest property networking meeting in the UK for property investors. To find out more about this month's event, visit www.bakerstreetpropertymeet.com. But for now, enjoy Ayesha's talk on the psychology of attracting private investors.
So who am I? And why am I standing here talking to you today? So I was originally a physicist, studied physics, and then I realized that there wasn't really any money in physics, and I sold my soul, as they say, and I joined an investment bank. I worked in banking for over 10 years. I started working at Morgan Stanley, spent some time in their real estate investing team. I did an MBA at London Business School. After that, I joined Goldman Sachs, where I worked for over 6 years as a wealth advisor to ultra high net worth individuals. I was responsible for finding clients and then managing their assets or their wealth for them. I resigned from Goldman Sachs a little over a year ago, and I set up my own property business called Axiom Property Partners, where I work with investors who are looking for places to put their capital, namely property investments. I then set up 2 property communities focused on groups that I felt were underrepresented in the property space. So one for women called Propel, and one for ethnic minorities called the Black Property Network. But Ranjan has actually done a fantastic job, because the diversity in this room is something that I don't actually see very often, so well done. And recently I won an accolade. I was named one of the 35 women under 35 by Management Today. And essentially what that means is they feel that I am one of the top 35 business women in the UK under the age of 35, and that was published in the Sunday Telegraph as well. So enough about me. Investors. I have had some very, very good experiences of working with investors, and some not so good. And I think there are learning experiences and tips in both of those. So I want to tell you a story, and I call it the tale of 2 investors. And you can probably tell from the pictures, one is going to be a very pleasant story, and one is going to be not so pleasant. So the first one is actually an investor that I first met when I was working at Goldman Sachs. I spend a lot of my day trying to identify and find people that I thought would potentially want to be clients. So I identified a gentleman, and I reached out to him. I sent him an email, briefly explained who I was and why I wanted to speak to him. And I heard nothing back. So I waited a few weeks. I emailed again. I was feeling, more confident. People recognize the Goldman brand. It's a bit like Marmite. Some people love it, some people hate it. I thought, potentially it should still get a response. I heard nothing back. I waited a few more weeks, and I said, right, I'm going to give it one last chance. Now, just remember, there is a very fine line between persistence and harassment. So I felt that this is probably the last time, but let me give it one more shot. But I'm going to call him. So I actually called him very early, before his secretary came in, so before the gatekeeper. And bizarrely, what you find is if you ring people very early, they tend to pick up the phone themselves. He picked up the phone, and I said, oh, wonderful, have you seen my email? Would you like to meet? And he said, the reason I've been ignoring you is because I don't want to meet you. I don't think that the firm represents who I am, and yeah, I'm just not really interested. And I said to him, I listened to what he had to say, and I said, okay, but one thing about this business and working with investors, it comes down to the people. To some extent, it is about the firm, but for me, it's very, very much about the people. And I said to him, you're writing me off and you haven't even met me. Give me 15 minutes of your time, I'll come to you. If you still don't want to work with me, I will leave you alone. And he agreed. He became one of my best clients. And what he said to me was, he gave me the time, yes, because I was persistent, but it was in the subsequent meetings that I had with him that I listened to what he had to say. I listened to, as an investor, what were his likes, what were his dislikes? Why was he initially hesitant about working with me and the firm? And I addressed those concerns on a one-to-one basis. And I think something else which he actually liked was he, as I was managing his account, I would give him very regular updates. So for a lot of my clients, I would send them monthly updates. And he called me one time and he says, can you stop emailing me and stop calling me? He says, I know you're there managing my money. That's what I'm paying you to do. Call me if the world ends and there's really a big problem. And then he said, actually, if that does happen, I'll probably have bigger problems anyway, so don't even call me then. And what I liked about that is that he realized what it's like to work in the industry, and we built a great relationship. And as I said, he was one of my best Goldman clients, and he's one of my clients now. I'd like to talk about another client. I was introduced to this person, so it wasn't somebody that I would necessarily seek to work with myself, but I said, I've been made the introduction, so I'm going to meet this person. They weren't a property professional, but they had a very good sort of corporate career, so I thought, great. And he had quite a lot of cash in the bank, which, when you're looking to work with investors, that's quite helpful. And he was telling me a bit about what he was looking for in the property space. And I had a developer on the other side that had come to me that was looking for funding, and I thought, oh, this is a great meeting of minds. I think they could work very, very well together. Long story short, about the whole process took several months to get all the documents together. 2 days before the developer was due to complete, the investor pulled out. And I called him, and I said, what's going on? We've met several times, we understood each other, he was very confident and happy about the deal and what was going on, and he said, well, I spoke to my father, who happens to be an 85-year-old who has no property investor experience at all, didn't even live in the UK, said, I spoke to my father and he said I shouldn't do it. What could I say to that? What I should have done, and I should have realized, and this is something I'll speak about as well, is it was actually his father who was the one making the decisions. So I had been speaking to the wrong person. So something that you always need to do is, who is the gatekeeper? Who controls the purse strings? It may not be the person that you think it is, and whoever that person is who makes the ultimate decision, that is who you need to be speaking to. I see that sometimes with couples. You may end up speaking to the husband, but it could actually be the wife who is the one who will make the ultimate decision. So you need to identify who that is and speak to that person. So, how do you avoid investor headaches? Now, I want to talk about this from the investor perspective, but also from those people who work with investors. So first of all, what is an investor? Just because somebody has money does not make them an investor. And I see a lot of people come unstuck because they assume just because somebody has some cash that, oh, it's going to be a great thing for my project. Investors also need to understand the deals that they are going into. They need to understand, to a certain extent, finance, so that they can understand how things unfold as projects develop. Most of the time, in my experience, I find in property projects, something always goes wrong. I have never come across a property project that has gone from beginning to end and has gone completely smoothly. If your investor doesn't really understand the sort of nuances behind it, behind the finance, behind how they're putting their money in, when things go wrong, the conversations are much, much harder. Investor psychology and behavioral biases. Sometimes there are things that will be influencing an investor or even the developer or the person seeking the money that they don't even realize. Sometimes the things that affect your decisions are emotional, and sometimes they're what I call cognitive biases, and I'll give you some examples. When I meet property developers or who are looking for funding, they're always very confident about their projects. Now, clearly, they should be, otherwise why the hell are they speaking to me? But I find that there's sometimes a lot of overconfidence. And that's because they really believe in their projects, but they're not necessarily looking at all of the risks. And then one of the biases that I see a lot on the investor side is something called home bias. People generally tend to look for projects that are near where they live because they feel that it's an area that they know and they feel more comfortable. But they may actually, in fact, find a better project much further away. But because it doesn't feel comfortable, they rule things out. And lastly, people tend to be swayed a lot by the press. Just bear in mind that the press is there to sell newspapers or to get eyeballs on the screen. So they like to sensationalize things a lot of the time to get you to tune in. So try to digest the information for yourself. So I'm going to put up what I think the key considerations are that you need to think about when you're working with investors. Who are they? How investment savvy are they? How much wealth do they have? You do not want to take all of somebody's wealth. And £100,000 or even £10,000 to one person, if that's all the money they have, they're going to react in a very different way to somebody who has a lot more but you're taking the same amount. So you need to know how much of their wealth you are taking. Who is the ultimate decision maker? I've mentioned this before. And what is their real risk appetite? Someone will sit opposite you and tell you that, oh, I'm quite comfortable with the risk of this project. But then if you put it into pound terms and say, oh, okay, so if I took £500,000 away from you tomorrow, you're going to be okay. And then they'll be like, oh, actually, no. So you need to find what their real risk tolerance is. What are the considerations when you're on the other side and you're either an investment advisor or you're a JV partner? So the first two are the same. So as an investor, you should be asking, who is this partner? How investment savvy are they? What is their genuine track record? I meet a lot of people in the property world who claim to have X, Y, Z of experience, but what is real? Do your due diligence. Look on Companies House. Did they really have all of these property companies? Have they really done what they said they've done? What do people think about them? What is it like working with them? Because you will need to be working with them. And lastly, how do they assess and plan to mitigate their risks? Especially in markets like today, for me, one of the things I focus on is risks. I want to know, what is the plan A? What is your plan B? What is your plan C? And sometimes your plan D. And developers think I'm a bit of a pain, but those are the things that you need to know. So, if you are a capital seeker, here's what you need to remember. Somebody will give you money if they trust you, if they like you, and if they think that you're going to make the money, and it's in that order. And I think Andrew mentioned some of this already in his presentation. You have to spend time getting to know people. If they do not trust you, they're not going to give you any money. They also need to like you. And as I said, then it's about how much money you're going to make for them. If you're an investor, remember these things. So the first three are the same. So when you're seeking a JV partner, you're going to look for somebody that you can trust, somebody that you can like, and somebody that you think is going to make you money. But then there are three additional things that I think are very important. Credibility. Who are they? What is their track record? Transparency. Are they forthcoming with information about the projects that they're working on, about themselves? And do they treat you like part of their team? I've seen a lot of developers who have their core team, solicitors, surveyors, builders, etc., etc., and then they consider the investor as the person over there that they just need to update on the project. Once they've got the money in, oh, I need to speak to them a few times, and then at the end, when it's time to pay the money back. That is not how it should be. As the investor, you should be an integral part of the team. You may not have a say in terms of the actual development, but when things go wrong and you need to be having conversations, if you have made your investor feel part of your team, they're going to be much more likely to negotiate with you and be flexible on terms when things are difficult. Thank you very much. If anyone...
Yeah!
If you enjoyed this video, hit the like button. If you're not a subscriber, what are you waiting for? Subscribe, hit the bell icon. As soon as we upload, we'll let you know. And enjoy these. They're all dedicated to helping you be more successful in property. Happy investing!